right, so today I'm just going to basically go over a few trade setups and showing you why the way I actually trade futures, whether it is the E-minis or the micros, and how you can make $500 a day. And it's fairly easy to do so if you're trading the E-minis. Micros may be a little bit tougher because it's all dependent upon how many contracts you're actually trading, but it's still possible to trade the micros. You can trade the E-minis with just a few lot sizes or contracts to arrive at, one trade, $500 a day. And I want to start by saying this: limit the number of trades that you actually are willing or looking to take on a daily basis, because that's going to help you preserve your capital. All right. And when I say that, I mean that if you take one losing trade, then be done. All right. I wouldn't push the envelope and to be taking multiple trade setups, maybe 2 at max. Okay. If you're profitable on the first trade, shut it down. Do the same thing in repetition the next day. The strategy which I'm going to show you is a simple way of actually, accruing or compounding $500 or maybe even $250, $300 a day. And you can do this in repetition if you look for high quality setups. This is what I want to stress today is in this strategy, which I'm just going to kind of break down just real roughly and quickly, because I want to show this because it is definitely doable. You can become profitable. You can make money part-time, full-time, whatever it is that you are looking to do. If you're interested in possibly making extra money and you want to really start, getting into the mode of trading futures on a regular basis. All I'm doing is looking for confluence. If you haven't learned about confluence, it is important, okay? Because the more confluence you have on the side, all that is that being able to have multiple means of confirmation, all right? The more confirmation that you have on your side, or more means of confirmation you have on your side, the more it's going to solidify a setup for you, is what I'm trying to say. So, for example, in today's trading session, even though there wasn't a lot, guys, give me 1 second. Okay. A lot of price action activity, I'm using range charts. People always ask me, it seems like on a multiple occasion daily, at least 10 or more times, why do I choose range charts? Guys, please watch the video content and you will find the answers to the questions that you may have if you spend time watching the videos. Everybody wants to shortcut things. Why do I use range charts? Because I started doing that from day one, and it's just clearer to the eyes to me, all right? Simply put, I'm able to read price action better by using the range charts. If you use the time-based charts, tick, volume, whatever it is that you love to trade, the charts you do, trade them and continue to doing so as long as you're profitable. Now, for me, the best setup in looking at today was this beautiful demand setup coming off of this area on this pullback to this key zone right here. So I'm going to mark this zone up. This is an area of aggressive buying to the upside. It is a demand zone as we're pushing higher. Even though we were bearish, okay? As you can see here, we start to break some structure back to the upside. Small little swings to the upside, but we're still breaking, areas of slight structure back to the upside as we move higher. Okay, we push up, pull back, push up, pull back, breaking structure higher. We're taking out swings to the left hand side of the chart as well. And that's what I like to see. I like to see if we're breaking structure higher to where we make, say, a high, then a higher low, and then we break structure higher. And then we're also taking out maybe a swing to the left hand side of the chart. We're taking out areas where selling activity took place, so the market is pushing higher. That's telling me now that, especially if I get 2 structure breaks to the upside coming off of a downtrend, then that's letting me know the market may be trying to push higher. As you can see, that's what it's doing here. We're breaking structure to the upside. We got to push to the upside here. Yes, this is the last low that the market made on Friday's trading session. The market pulls back around about 8:30 this morning, and this leaving behind a beautiful area of, if I said the supply, I meant to say demand, guys. Sorry about that. But this is a beautiful area of demand resting right here. Aggressive buying to the upside. When you see things like this where the market is just, bursting to the upside or downside, green candle, green candle, green candle, green candle, that is pretty much, the institutions, the banks, the big players in the market, setting up and pushing the market in one direction real quick, leaving behind gaps in the market. So I treat these gaps as like they're imbalances in areas of the market has to fill. And the way I look at it is as if there could be orders resting on the table. They were quickly filling orders and couldn't get them all filled at the same time or quick enough. So when the market gets back there, it's like almost a 90%, chance that the market is still going to come back and react at that zone because, it makes sense. Look at it. aggressive push to the upside here with all these gaps, they got to come back and fill that area then, and they're going to bounce, push the market back up, okay? But at this point where I see the market making slight structure breaks to the upside, and we've already made a higher low and pushing higher and breaking structure to the left side of the chart, that's letting me know that they're taking sellers out to the upside. So they have interest to go higher, and all I need to do is look for an opportunity on a pullback to a key area of demand. The market taps the zone. I'm not interested 100% or sold on the fact that I need to be going long at this point. My interest lies because of the confluence of the market showing me that it's taking sellers out, and we have a beautiful area of demand, and we have a gap back at the zone, which marks it a high quality or high probability area of demand. All these things are the ingredients that are setting the recipe up for me to be able to take a trade going to the upside. The only thing I'm looking for now to kind of solidify everything, like I said earlier, is moving down to my lower base chart to see if we have a zone that lies within the higher base zone. So the key to everything here is marking up. First, number one, following structure. Which way are we moving? Two, then I needed to identify for moving to the upside and breaking structure, a nice high probability demand zone. This is one right here. Now that I've marked it off of my higher base chart, all I want to do is move down to my lower base chart and look for a setup with, meaning a zone within the higher base zone. If there is a zone on the lower base chart that is inside the higher base zone, then that's confluence. Okay, higher base setup, lower base setup, confluence. Raising the stakes for me to take it, have interest to take the market back to the upside. But the key to it all is understanding the structure of the market. We're bullish at this point. Even though we came off this nice bearish move to the downside, we're starting to move the opposite direction. And this is a sign of a reversal right here. If you really look at it, it's kind of like a small head and shoulders type setup, inverted. We got an inverted head here, shoulder activity, left shoulder, right shoulder, pushing up, pulling back. So that's giving us some confirmation the market may be trying to push to the upside. So let's move down to the lower base chart right now. Now, this is the pullback that we've seen on the higher base chart right here. Right here. It's just on the lower base 24 range. This is where the market tapped into the zone. Once it taps into the higher base zone, okay, then we're moving down to the 24 range chart, which is the lower chart, to where I'm looking to see, is there bullish activity to the upside just as well? Of course, if you have it on the higher base chart, then you're going to have bullish activity coming back to this area on the lower base chart. But the thing is that we are trending on the lower base chart. We're breaking structure back to the downside. The market is taking some areas back to the downside, out, structure back to the downside. This being the low right here. So if the market breaks this area here, this is a major structure break if the market came down and break here. These other swings in between, I consider those kind of like minor structure breaks or back to the downside, because this is forming pretty much like it's a swing. Okay, it's setting up a low, a high here, and it can swing down and push lower. But as it's breaking structure lower, it taps into, as you see, the higher base 120 range zone, the demand area. There's a smaller zone. The market, as it pushed up here, was breaking structure higher. There's a zone within this area right here. So this is giving me confluence, as you can see right here, where it taps into a lower base, high probability demand zone. High probability demand zone on the higher base, high probability demand zone on the 24 range, zone within a zone. You get the break and the close of the candle. Now, I talk about this in videos. You can go in aggressive and look for the break, or the break of a candle close type thing, to where the first bullish candle right around 20,487 or 488. As we slightly break above that at 488, you can look to go long, or wait for the break and close of the candle, meaning the bullish candle closing completely above with the candle close at, say, 20,494 to go long. What are we aiming for? We look back at the higher base zone. There are gaps, especially like right up in here at NB Field and back up here. So the market's going to come back, especially if we're bullish on the higher base chart. Then you want to make sure that, once you get to the trade, to be aiming for higher base areas to where the market could actually fill back into. Now, be mindful if there are areas of, say, for example, supply coming to the downside. But when we tap to the zone, there could be, like this right here is a supply zone right here where the market comes down. So you want to pay attention to things like that. Because the market may want to react when it gets back up to the zone. It's not to say that we have a complete, shift in the market back to the downside at this point here, but you want to pay attention to what's resting above, supply areas in this case here. But the market loves to fill these gaps back going to the upside. And as you see, because we're bullish on the higher base chart, then even though we may look as if we're forming coming back bearish on the lower base chart, we're looking, we're going to use the higher base activity, okay? This is a higher base demand zone. So when it taps into a demand zone on the lower base chart, this is a demand zone here, even though we're kind of bearish coming back down to the downside on the lower base chart, I'm looking and using the higher base sentiment, which is bullish. So when it taps into there, that higher base zone is going to be weighted a whole lot more than what the activity is telling me on the lower base chart. We tap into a higher base, high probability demand zone, structure being broken to the upside on the demand zone. Nothing's telling me on the higher base chart that is folding back to the downside. So I'm looking for a bullish, a bullish trade to go to the upside. So this was a beautiful area to take the trade going back up. Other than that, today, after this trade setup right here, I mean, the market just ran to the upside, kind of folded back towards the, 1 o'clock time frame of the day, and it's kind of moved sideways. So this is probably one of the best setups that I've seen to take place today. It was pre-market, before the session, but it was a great trade setup. Anybody who traded last week, I just want to show you, there were some great setups like right here, market pullback, beautiful area of supply. Because we're breaking structure to the downside, you've got to be able to see this stuff with your own eyes. If you take a channel to the downside, you can see it right here. The market, low, lower, high, low, lower, high. Okay, we got a double bottom right here, comes down, breaks structure, breaks these lows here. That's liquidity as well. Pull back here, demand, go short. That's what demand. I'm sorry, guys. Supply, go short. Okay, from there, the market just kept pushing lower into the 14th, into the 15th. So pull back, supply, break structure, pull back right here. Now, if you pay attention right here, there was, even though this is a supply zone off the higher base chart, if you move down to a lower base chart, of course, we're looking for confluence where we have a higher base and lower base zone. One didn't happen here. It came down. We pretty much got like a double bottom right here, even though it slightly wicked this area. But again, I still treat this as a double bottom. Anytime you see like a double bottom, double top type of formation, the market's going to react and probably push a little bit higher. It does that, comes back, runs lower, breaks structure right here to the downside, okay, as you can see. And actually, this right here is a liquidity sweep right here at the bottom. It's grabbing liquidity below these lows right here and breaking structure to the downside, pulling back key area of demand. Supply. Gosh, supply. If you move down to the lower base chart, I'll even show you on the 14th right here. That was that zone marked on the the 120 range chart, supply area. We have a supply area, a smaller zone on the 24 range inside the higher base zone. Go short. Okay, because the market sentiment to the downside on the 120 range chart. We can see it. The market's just breaking structure lower as it moves lower. And then Friday, the market just kept pushing to the downside. If we're looking for setups on the 120 range, didn't get too many of them, even though let's see, this right here was this is a supply zone. We don't have a breaking structure with it, but this is a supply zone. The market reacts at it, breaks lower. And then it's kept like little choppy swings to the downside. This right here, push down, pull back, came right here, slightly broke below. Well, it did end up breaking below this area. Not a clean breaker structure, but it still broke below, pulls back. It doesn't tap the zone. On the 120, got a few ticks of gap right there. So I think, you can't consider that to be, a supply, well, it is a supply zone, a tap back into the zone is what I'm trying to say. But, from there, the market is kind of moving in one direction. And sometimes it's tough to look for a way for the market to kind of pull back to key areas. And it may not ever pull back, especially if we're trending real hard in one direction. We may not get pullbacks to those confirmed areas of supply or demand all the time, especially if the market's really running in one direction. That's where you have to look at, maybe have another market to look at or three markets to look at. So you want to probably have more than just one market, okay? Because you may sit in front of the chart just looking at the NASDAQ all day long. And if it's trending hard, then you may not be able to get into a solid setup. But today, this was a beautiful setup right here. Even, if you got in, like I said, on the lower base chart, let's see, where were we at? Right here at 94. The market ran up there from 94 all the way up here. That's 494 all the way up to 724. So that was a big push up in the market. How many points? Yeah, that was a big push up in the market right there. And then it comes up here. Yeah, there is that's low probability, but I'm not interested in this kind of stuff to the left-hand side as being, these could be supply areas here, but they're zones. And I'll talk about this in prior videos that took place some time ago. So can the market hold up at these zones? Of course it can, but I'm not interested in really trading any old zones. I'm looking at current price action. I like to trade current price action in the direction which the market is trending or moving, because it makes sense. Anything older, especially if the market is turning its direction and is bullish back to the upside, it can break these zones right to the upside. So if we're bullish and the market's already shown a reversal in the market and we've got supply zones resting over here, more likely it's going to break through those areas. All right. So can it come back down and break below this area now here? Yeah, it surely can. It could break below here and take out structure here. This would be a structure break if it broke below this area here at 482, and then it could come down here and break this major low right here. So right now we got a little channel to the upside, just to show you right here. Channeling to the upside, breaking structure. Right now, it's moving sideways, all right? It can come back, test this low, and then break higher. It could do that there and give us another structure break above this area here. So, anyway, I just want to share that with you guys today. Be very mindful. This is a very, a great way to become profitable, making, at a minimum, one trade a day. Depending on the number of contracts you trade, you can make $500 a day pretty easy. Just trading 2 contracts on the NASDAQ, say, for example. You could definitely do it. You could do it with 1 contract if you trade, depending on how many points you pick up. I'll say it that way. Okay, you could trade 1 contract on the E-mini NASDAQ and make $500 a day, but it depends on how many points you are. It's a lot easier to trade 2 contracts, but again, you have to have that kind of capital or trade more, because the NASDAQ E-minis, you have to have a minimum of $1,000 per contract. That's the margin to trade. The micros is 10 times less. It's $100 per contract. So some people like to load up on with micro contracts, and you can do that and still do the same thing. Like, you could actually match out 2 E-mini contracts trading, by trading multiple micro contracts. So kind of do the math yourself on that if you know about trading futures. All right. Outside of that, that's all I want to talk about today. Anyone interested in joining the Discord, links down below in the description portion of the video. The first link is the Discord. The second one is to become an elite member. And if you're interested in seeing trade setups like this, ones where I break down the trade setup, go into detail about where to place your stop loss, where to place your profit target, go into detail about market structure. I have tons of video content describing trade setup after trade setup after trade setup in detail, so that you can understand and trade things or setups just like this. You may want to become an elite member then. Very inexpensive. It's only $6.99. You're supporting my efforts as a content creator, but I'm giving you so much more in return. It's like trade, basically taking $6.99, and I'm not guaranteeing anything, guys. I'm telling you that now because, part of trading is being able to understand structure and understand how to trade. And my strategy may not work for you because you may come from a different avenue or path, and you learned something else. I learned that a long time ago. We have to undo some things within ourselves and get our mind right to be able to. It's like trying to, teach an old dog new tricks type thing. You have to really kind of focus in on and do away with things that weren't working in the past, and then trying to learn something new. Yes, it's hard to undo and then relearn, but we have to do that from time to time if we really want to seek out and become great, or in reference to what we're passionate about doing. Plenty of people have contacted me and told me, Mike, I appreciate you sharing this type of content, and I love doing it because I want to see people, first of all, become profitable and be consistent in doing so. And not every trade setup is going to work. That's why you have to cut your trades early. And I'll talk about that on plenty of videos just as well. It's about the execution of where to get out, where to get in, those type things, but definitely where to get out so you're not taking a heavy hit on, a stop. Okay, you're cutting the trade early so that way you can live to see it and make the difference up on the next trade. But again, if you're interested in understanding and grasping the strategy, I recommend, possibly becoming an elite member. That link is down in the description portion of the video. Excuse me. Just scroll down right under the Discord link. You'll see the second link that says become an elite member. Click on that link. There's 2 tiers that'll pop up. The second tier for $6.99, and you're getting access and quickly get availability to all that additional membership content surrounding the trade breakdowns, the video playlist, and a great video that I covered on market structure. But that's all I want to share with you guys today. Not to push anyone's hand or force anyone's hands, because in the end of things, you support my efforts as a content creator, like I said, but I'm giving something back. Outside of that, that's all I have. I really appreciate everyone tuning in, watching today's video. If you have not become a subscriber, please take the time to go ahead and sub. Click the subscribe button now. Make sure to turn your post notifications on so that you never miss any of the uploads. And last but not least, I appreciate it if you can definitely click that like button right now, that thumbs up button. It helps the algorithm to basically put the video content into rotation, or get it into, the program, so that other people just like yourself can gain access to this and, start to understand, a good way to actually trade if they kind of backtest and put it into, get their mindset right to be able to look for certain things. That's the thing. But first and foremost, I'm saying this, and I talk about it in so many videos. Number one, learn market structure. Take care. I'll see everyone in the next one.